Welcome to the first ever episode of Sports and Stocks with Spartacus and Steve. I'm Spartacus.
And I'm Steve. First, we're going to be talking about the Winter Olympics. Then we're going to touch up on the Dow Jones and its recent decline. Then we're going to hit the commentator from the Olympics. Drew a little bit of attention. And then we're going to talk about the overvaluation of Tesla. Then we're going to be looking at the All-Star game. And then after that, we're going to be talking a little bit about the Amazon-Walmart battle. Those two have been going at it for quite some time, and it looks like one is pulling ahead. And then after that, we're going to be looking at the dunk contest, and then the 20% gain we saw at Diamond Equity. And then we're going to be talking about the Louisville 2013 title. And then we're going to look at the Federal Reserve rate hike. All right, back to you, Spart.
All right, so to start off, we're going to talk about some of the winter sports going on right now. Obviously, it's a huge
Norway blowout, let's call it.
No, it's a huge event for especially those European countries and the United States even. And obviously, well, at least in our region, our area, the Summer Olympics seem to capture the attention. But the Winter Olympics is still a huge event. Obviously, you guys know we're based in Utah, so the best snow on earth. There's a lot of Winter Olympic athletes that have come from or trained in Utah.
We're proud. We're very proud.
Very proud. You know, Park City. Shout out to the Park City natives. But look at it, the most important thing. This is always at the top of the list when you think about Olympics. The first thing that comes to your mind, medal count. Who's winning in the medals? So, first place right now, Norway, with 33 total medals and 13 gold. We're not going to keep track of silver and bronze. That's whatever. And then second place, right behind Norway. Well, I don't know if you could say right behind it. They're 9 medals behind, but 24 medals for Germany, 12 gold. And then you got Canada with 21 medals, 9 gold. Not a surprise there with those 3 countries. And then the United States with 19 total medals, 7 gold. I mean, you look at the United States, and yeah, they're 4th place, but when it comes to the Summer Olympics, they just dominate. So we're not scratching our heads. We're not worried about it. And they've been representing us well. But I mean, some athletes that have shown this Winter Olympics. Shaun White. What an amazing comeback. I mean, what is he? 50? Seems like he's been in the Olympics forever. Doing the X Games forever. And then you got Lindsey Vonn, who took bronze, I think, in the downhill ski. So, you know, great. So far, it's been a great Winter Olympics. Very entertaining. But now we'll head over to the Dow Jones drop.
Dow Jones. Now let's talk about that. Investors are looking a little bit jumpy at the moment. You mind pulling up the chart?
Yes.
We're down about 167 points today. But when you look at the past month, we're down a solid 5.5%, which is a little bit much. Although we have recovered a bit from our original low of 9% down. We're back up to only 5% down, which I'm not too worried about that. And when we really delve in deeper, try to look at the causes, we're gonna look at leveraged hedge funds. Now these funds have been taking advantage of the almost zero volatility that we've enjoyed this year, and they've been buying on margin, and we had a small drop due to computers, and these hedge funds, they started getting their margin calls, and they were forced to pull out and cut their losses because they can't lose their money on margin. That's just
kind of like the Mavericks.
Kind of like the
Tanking
Mavericks,
this year.
yeah, tanking. But anyways, the hedge fund drop triggered a stock market slide, almost 10%. Very sad, very sad.
Mark Cuban got fined $600,000 for saying that the Mavericks were going to tank this year. Anyway, go ahead.
Right, yeah, anyways. But when we really think about it, what I see here is not a horrible crash. It's a buying opportunity, and a whale of buying opportunity it is.
Where's the max chart we got there?
Yeah, max chart. See, we're down almost 10% from our high, and I don't think we're done. I don't think we're done as an economy. I mean, when you look at Trump's new tax plan, corporations are swimming in cash, and they're willing to reinvest it and get it back to their investors. Now, we may be a touch overvalued in the market right now, but investors aren't too scared. Now, back to the commentator. Let's talk about that.
So, this is a very opinionated issue at that.
Yeah.
So, we talked about the Winter Olympics in our first segment, and you know, for me, I thought for the United States, it has been a very successful Olympics, with the exception of some of the representation we are getting from, and you think it was an athlete, but I mean
he is. He's had some good runs.
Well, let's look at him. His name,
Johnny Weir.
Johnny Weir, and if you've watched the figure skating competitions, you know who we're talking about. But he commentates the figure skating
A little bit about
on
him.
national TV, and here we'll pull up a picture of him for you. There he is, the guy on the right.
The one and only.
I mean, what? I don't know what that is. It says here he is a American figure skater, fashion designer.
I'm not seeing fashion designer.
I'm not seeing joke here. If that's
Maybe try to make a statement.
yeah. And television commentator. He is a two-time Olympian, 2008 World Bronze Medalist, a two-time Grand Prix Final Bronze Medalist, 2001 World Junior Champion, and a three-time U.S. National Champion. So I mean, he's got the background. He knows what he's doing. I'll give him that. But I mean the look this is giving the United States is something, and of course this is an opinionated topic, a strongly opinionated topic.
All
Right, now we'll move on to
talk about a little bit of the overvaluation of Tesla. Now, Tesla. Oh, the things I have to say about Tesla. Well, Tesla closed at $333.30 today. They've got a market cap of $56 billion.
to pull up the graph.
Yeah, sure. Why don't you pull up the graph? And that seems a little high to me. They've got a price to book ratio of 29. So that means that their company, their stock price
29?
is 29 times
That's got to be close.
their
to
assets.
That's got to be close to Dwight Howard's free throw percentage.
All right, yeah. But anyways, for every dollar of asset Tesla has, $29 are invested into that company. I mean, what is that? Here we have a company that has not made a single penny since 2002. They're running on borrowed money. They ain't got nothing. Pretty close. But anyways,
What do you want to go to the month?
oh yeah, go to the monthly. Let me show them a little bit of this volatility. From there to there is about 12%. Now, what kind of well-established company swings 12% in 1 month on nothing? No news under the sun. And this company is going up, down, around the corner. What are they doing? Investors cannot decide. Anyways, back to that all-star game I was talking about.
Hey, but let's talk for a second. Teslas are cool cars, aren't they? Why not
Well, they're
invest in their
wonderful
stock?
cars, but they can't make money on them.
Why not? Shouldn't they be expensive
Well,
cars? I mean,
they are expensive cars, but Tesla has been just so obsessed with making their own stuff. They started making their own seat covers, and they couldn't figure out how to do that. And so that bottleneck made it so they could only produce less than a tenth as many of those Model C cars that they wanted.
That's slowing down.
Big
the
promises
conveyor
to
belt right
investors,
there.
not a lot of results.
All right, now to the All-Star game. The All-Star game, obviously the crowning
refill.
Obviously, the crowning topic for the NBA right now, obviously, and as you probably know, the final score 148-145, a tight one. In the closing minutes, Steph Curry tried to get the last shot to tie up the game. Just couldn't. He couldn't get open. I mean, LeBron's defense was all over him, and then he passed up kind of a deep shot, then dribbled to the corner, ended up passing it to I don't even know who then missed the 3-pointer so after the buzzer. I mean, score at halftime, LeBron was up 9, 45-36, and then obviously the second half they kind of
Choked a little bit.
yeah, they kind of
Not so hot.
no. So, but let's talk, Nate, Steve, for a second. A little bit about the new format for the All-Star game. I mean, how they had captains instead of just taking the top players from the East and West. What do you think about that?
You know, no, I think it's revolutionary. Although I do see some problems with favorites.
Yes.
Now, I could see a bit of a good old boys club forming, excluding some of the excellent rookies that are coming about. I mean, when it's between
no rookies in the All-Star game this year, by the way.
Yeah, no rookies. When it's between your friend and some guy you don't even know, you might go with your friend even if the other guy's better.
And
that's
luckily,
what worries me.
Yeah, that is. Now they didn't televise the All-Star draft this year.
No.
Which I think was good for the players, because they might take it hard if they weren't picked in a certain, order. But I mean, and we obviously found out Kevin Durant was picked first by LeBron, which was not surprising.
No surprise there.
But I mean, it is kind of surprising. It will be fun to see, because next year they have announced that they will televise the All-Star draft. So it'll be interesting to see the players' reactions who get kind of picked at the bottom of the barrel in the draft.
What all goes on with that?
Okay. Now we're gonna talk about the Amazon-Walmart battle.
All right.
What has been happening with that?
A lot. Let me tell you, Sport. Well, you look at this. Their 5-day chart, you want to pull that up? Walmart, stock symbol WMT. They just got brutalized. They just released earnings, dropped from $100 and something to $91.52. We're talking a 10% drop here. 10%.
10%? What is that, Dwight Howard treatment?
Something like that. But let me tell you, we haven't had a drop like this with Walmart since 1988.
Too many Dwight Howard jokes.
Yeah, we gotta give the guy a break. But anyways, Walmart has been a safe bet, going nowhere but up since 1988. That's forever ago. 30 years. That's a solid win streak if you ask me. But anyways, let's talk about why they're down. So, we just got their earnings release. And when we look at their earnings compared to Amazon's earnings over the holiday season, Walmart got brutalized. Amazon, even though Amazon's stock is way overvalued, beyond overvaluation, I mean, this company is worth about $150 per share, and they're trading at $1,400 per share. I mean, this company is hugely overvalued. But the numbers don't lie. Walmart, they got blown away. They could not keep up with the online sales.
From what? What was the big event?
Christmas.
Oh, and it's just barely seeing these.
Yeah, we're just barely seeing it. I mean, these earnings reports, they don't come out for another couple of months. after the end of the quarter. They gotta get their financials ready and sent in.
Sometimes stat sheets take a while to get back. So
yeah, and investors are a little jumpy on Walmart right now, but what I see is maybe a bit of a buying opportunity as we see our economy going nowhere but up, but a recession has to come along, and Walmart is the king of recessions. All right, back to you, Spartacus.
all right, so we just got done talking about the All-Star game. Some people's favorite thing of the whole NBA season, and it's not like the NFL where the Pro Bowl. I mean, who watches that? It's
no.
It's horrible. I mean,
I didn't know they had a Pro Bowl.
And honestly, people have been saying the NBA is on its way to become America's new sport ahead of football.
Mm-hmm.
And as much as I hate to say it, it's the facts speak for themselves. It's true. And don't get me wrong, I'm a huge football guy. And so anyway, but the crowning event of the All-Star game, which for some is the crowning event of the NBA season, the dunk contest. That is everyone's favorite to see. Nate, do you like the dunk contest?
Now, I'm no huge NBA fan. You see, I'm the stock guy, but even I watch the dunk contest. I mean, would you look at Donovan Mitchell? He blew it away.
Donovan, okay.
I love that guy. Love that guy.
Donovan Mitchell, he ended up winning. And let's see.
Best thing that ever happened to the Jazz, if you ask me.
I mean, this guy drafted 13th overall by the Denver Nuggets, who then they traded him off to the Jazz. The Nuggets are regretting that bad right now. I mean, and they're doing good. They're doing good in the West. But with Donovan, I think he might have been their missing piece this season.
Mm-hmm. And we see this guy leading an 11-game winning streak for the Jazz. Rookies aren't supposed to do that.
Rookies are not supposed to do that. And, you know, Donovan Mitchell, Rookie of the Year, that's a topic for another day. But, I mean, this guy is flying. So athletic. And he ended up winning it. Mm-hmm. If you haven't seen the dunk contest, go watch it. And there were some amazing dunks. I'd say it wasn't the best All-Star or dunk contest we've ever seen, but I mean, Dennis Smith Jr. threw down a nasty dunk.
I was impressed.
It was, yeah.
I was impressed.
A dunk contest.
All right, let's talk about Dine Equity for a second. Ticker symbol DIN, if you don't mind. DIN. Humongous gains on their last earnings report. This is a company that has been beat up, kicked to the curb, brutalized.
1 month?
Yeah, hit the 5-day if you don't mind. Earnings report. Bam. You see what an earnings report can do for a company? Wonders. Now, when we look at why, we're going to be talking about social media trends. And who can predict social media these days? But
no one, man.
If you guys haven't noticed, there's been a bit of an uptick in Applebee's memes. You notice that? Well, Applebee's is owned by this giant, Dine Equity, and Applebee's just blew everyone away.
From their memes?
Yeah. And most people are saying it's because of memes.
Who knew
Internet
memes? Memes could have such a big impact in Dine stock.
I know. It's just such a wild card.
I mean, no one can predict it. That's part of the wild card idea that is stocks.
You see, this company just got about $200 million in value just because of an internet trend. I mean, you look at internet trends, those that have gotten famous. Impossible to predict. I mean, if I could predict internet trends, I would not be here today. But, I mean, we look at just the huge reversals the internet can cause. $200 million in free marketing just because some guy likes Applebee's. Anyways, DineEquity is definitely an interesting one to look at. Their dividend yield is still a whopping 5.79%. That is much better than you're going to be getting at any bank, let me tell you. What kind of glorious company gives a 5.79% dividend right after a 20% gain? I mean, they've gained 5.5% today, but when you look at their gains since February 17th, I believe, that's over 20% in value. Before that, their dividends were at about 7.11%. Beautiful company. I was loving their dividends. But now, oh man, the value of that company is singing sweet sounds, let me tell you. All right, back to you on Louisville.
Oh man, this is the story of the day. Louisville loses NCAA appeal and becomes the first men's basketball program to have an NCAA banner taken down. They lost their 2013 national championship. How bizarre is that? I mean,
what are the causes of that? What makes that happen?
So
where does that come from?
There's a lot of things, and Baylor was a prime example of this in college football. I don't even know what they did, but they lost the ability to play in a bowl game for a certain amount of years. Pull this up, and that took a huge hit in their recruiting. People didn't want to go there because why?
Who wants to go to a school that can't play in a bowl game?
I mean, that's the highlight of the year for a ton of teams is their bowl game. So I mean, so they went down they've been down the last few years, obviously, but they've been, but anyway, that's a different story. We're talking about Louisville, and let's just read this, the cause. It says, student athletes, student athletes competed while ineligible during the 2011-12 through 2014-15 academic years, according to a decision issued by the NCAA Division I Infractions Appeals Committee. Anyway, it's just an unfortunate thing. It's one of those things where you're just like, man, that hurts for Louisville fans everywhere.
And I mean, if everyone would just keep their hands, feet, and other objects to themselves, we wouldn't have this problem.
Yeah, I mean, the audacity. The audacity. And of course, the memory is still there. They beat Michigan, but it's still just,
that stings.
It stings. Definitely stings. But I think Louisville will bounce back from this. I think they'll, Rick Pitino has a good control over that program. I think he's a great coach. I think they'll bounce back from this. It doesn't really affect their playing. It's not like Baylor's where it affected their recruiting or anything, but it does at the same time take away their national championship.
Now let's talk about the Federal Reserve rate hikes. Now, we just barely had a recent rate hike, which had a little bit to do with the recent stock market crash, which is not doing too bad anymore. We've gained back about $500 billion worth in value, but investors are jumpy. We're looking at another Federal Reserve bank hike. So what that is, it's the cost of loaning money. If the Federal Reserve hikes their interest rates, the banks are going to hike their interest rates. And if the banks hike their interest rates, people spend less. Now, when the cost of owning money goes up, people aren't going to spend as much. They're not going to take out loans. And that's going to be the knife that drives our economy to its knees.
Sticks it in them and then twists.
Ends it. Now, let me tell you though, I'm not too worried. I don't think this rate hike is going to be too severe. Because the Federal Reserve, they know they don't have many more options. The cost of owning money is almost zero right now. Loans are so cheap. I mean, it's dumb not to. It's dumb not. You can get more in the stock market than you can get on a loan. So of course, people are taking out loans right and left. But what we really got to worry about is a buying on margin with these loans, because if the loan rates go up, how us as investors could be affected is by those who are buying on margin. Now, margin is when you use money that's not yours to purchase stocks in the stock market. And of course, if anything goes down when you're buying on margin, you gotta sell out quickly so you don't have a lot of debt. Don't worry about that.
I was looking at the Baylor.
Anyways.
Title 9. Sexual assault again.
Dirty, nasty stuff. Well, I think that's about all for our show. Thanks for watching. Tune in next time.
Thanks for tuning in. Don't forget to subscribe, like, and we'll be back next
Leave
week.
us some love in the comments, See you next time on Sports and Stocks with Spartacus and Steve.